Okay, welcome everybody to this evening's XAUUSD webinar. My name is Duncan Cooper. Tonight's webinar is live forex market review, identifying high probability trading levels. So with that in mind, let's get into it. Now, before we do, if you can read through the disclaimer. So there's a disclaimer if you just read through it. If you're on our YouTube live stream, I cannot see the chat, but you're more than welcome to join us. I've given you a link in the YouTube live stream chat. Just follow the link and join us in the webinar if you want to chat to us. For those in the webinar, I have the webinar chat box and question and answer box open. So if you want to ask me something, just type in. All right, so as people are coming in, if you just read through the disclaimer, that would be great. All right, we might move along. Now, if you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at XAUUSD Securities. And I'm a full-time forex trader. I've been trading the market now for more than 15 years, mentoring for more than 10. My email's there if you want to contact me. Just email me at duncan.cooper@acy.com. Through the week, you can connect with me at the website. Go to the Market News tab, so acy.com Market News tab, or our YouTube channel, XAUUSD Securities Australia, or you can connect with me on Twitter and LinkedIn at those handles. And we have our Telegram channel. If you want to get access to that, just contact Nathan Bray's emails there at the bottom, but I'll put that in the chat for you. So if you have a question about maybe setting up a demo account or a live account, just contact Nathan too. And if you want to get access to my MT4 chart layouts and templates, then simply contact Nathan. His details are there in the chat. All right, now let's get into the news. I did notice at the top of my PowerPoint, I was just doing a picture today, updating things, and 8 p.m. Sydney time. It's not 8 p.m. Sydney time tonight, but webinars from next week will be at 8 p.m. Sydney time. It is actually at 7 p.m. tonight. So I should maybe correct that. We're starting at 7 tonight, but next week we'll be starting at 8 p.m. Sydney time, okay? All right, so let's get into the news for the day. It's coming out. These times are New South Wales time. So later in the day, 10:30 p.m. for US, we have final GDP QQ and unemployment claims. So I'm sure that GDP figure can drive the market and the unemployment claims. So be aware that there's an event there at 10:30 p.m. that is definitely a risk event. 6 in the morning, Fed Chair Powell is speaking. And then tomorrow evening, we got 10:30 p.m. for Canada, GDP month on month, core PC price index for the US. And on the midnight, getting into Saturday, we have revised consumer sentiment. Market will be closed, but there's China manufacturing PMI data coming out at 11:30. That can affect the market on the opening for definitely the Aussie crosses, depending on what that comes in at. All right. All right, so really the US item there, final GDP and unemployment claims coming out this evening can affect the market. So bear that in mind. With that in mind, let's get to the charts now. We've been having, just want to drop to the dollar index first of all. Not having a pullback. I was saying this is getting overextended, but saying that on Tuesday, we're further overextended now. We are not having a pullback yet. You know, the last fib range where we pull back on the dollar index, we're beyond the 200% level. So this is going to need to have, or I got a few messages in say you can't see my charts. All right, one moment. All right, just let me know if you can see my charts now. All right, great. All right, sometimes I have a technical issue, so we'll just drop back to the news event just to rerun through just what's happening today. You can go to Forex Factory and catch the rest, but we have the US final GDP figures coming out and unemployment claims, 10:30 p.m. All right, that's New South Wales time. All right, let's get into the charts. You can go and look at what else is coming out. Of course, you've heard my commentary, but you can go and view that now. All right, so now you can see my charts. US dollar index day chart here. Last pullback, then we moved up. We're beyond the 200% extension level at the moment, so this is highly extended. It is due a pullback, and we've really had a massive breakout above this high over here, which is a monthly high. So if we drop to the monthly chart, you'll see that we've broke above. We've only got one more trading day for the month after today. So we've had a clear breakout above monthly resistance. Maybe we're going to head up towards the high last year. Don't know whether we can get there before the end of the year unless we get some massive risk event coming into the market, but you never know. We had some big moves up through here. So those 2 months. So if we got the similar, let's just measure that. If we got a similar move like those 2 candles, then we would surpass the high of last year. So it's more than possible. All right, so monthly trends definitely turned up. We're not having a false break in this area at the moment. Weekly trend is up. It's been up for now 2, 4, 6, 8, 10, 11 weeks now. We just had a week down here, very minor. So it's not having any pullbacks yet, really, of any significance. We need to put in this level now. 107.678. Next level of resistance there. All right, so, you know, on all these pairs moving down versus the US dollar at the moment, I'd be a lot happier if we can get a pullback. So if this dollar index, for example, was to pull back to now broken resistance becoming support, that would be ideal. That would give us, well, about a 50% pullback. But it is overextended. So, you know, after 1, 2, 3, 4, 5, 6 days up, it's not going to have too many more days up before it has a pullback. Doesn't mean to say it's going to change the trend whatsoever, but, you know, you just have to decide when you're going to buy. You want to be maybe buying in the first or second day up, not the 6th, 7th, 8th day up. All right. My mouse is deciding to freeze. S&P 500. Well, on Tuesday, I was looking for some kind of rally, but that's not coming either. We have broken through support. So we'll just go to the weekly chart and have a look where that's from. So this high here, where we moved above, and we got some support slightly above, we've moved below. So I would look for 43.23 to be resistance now. Now we've moved below. So I would, you know, if you want to get short, again, 2, 4, 5, 6, 7, 8, 9 days down. We have a rejection candle there yesterday. It's not at a major level of support, but it may offer 1 or 2 day rally from there before moving further down. So I would just be monitoring for a pullback maybe to 43.23. The weekly level that we move below, does that become resistance for a move down? All right. My commentary today could well be very similar on lots of things. We're quite overextended. We need a bit of a corrective rally. It's easy to have the fear of missing out, but nothing usually just keeps falling down before we have a rally back up. All right, so let's get into the euro dollar. Now, to the day chart, and it's not having a rally yet. These are the markers I had on Tuesday, but we've actually traded down to trade below this level, and we'll just add that level at the moment, this triple bottom area here. It's weekly low, then there's a further low here. 104.81, which we haven't been down at the moment. So it's definitely weak on the euro dollar. We're taking out the lows that have been forming this year. That was the low of the year. This was the low from last year. Just double checking it was last year. That was actually January. That's the yearly low at the moment. That was done in January. But two lows formed early in the year. One's been traded through. So, it wouldn't be a surprise for me to see some form of bounce here to trade back up to this broken level. And that's only about 120 pips away for a rally. So to the day chart. So I said this on Tuesday, this could be a good area of support in the short term for a rally back up. And I would be still watching up here. 106.35. I'm not going to get caught trying to engage down here. Now, if you want to engage down there, what I've noticed is that, we've broken below this level yesterday. It's 105.16. The 4-hour trend is down, having a little bit of a correction. Is you may see, and we can only hold at the central pivot point today, we may see this want to move back below 105.16 to continue down, but you're going to have to work out yourself whether or not my mouse is playing up. Excuse me a moment. I'm just going to disconnect it and reconnect it. All right, so you could watch for a failure here, but be aware we're very low down. So if we see another test of the central pivot point and we hold, because in a very weak market, we barely get above the central pivot point. You can see Tuesday, that's the central pivot point here. We just traded there and then traded down. Yesterday, we couldn't get to central pivot point, traded down. So we may just fail at central pivot point and then trade down, but you have to be happy to be trading at such low levels. We're very much definitely due a rally. So you'll have to work out for yourself, do you want to trade at such low levels? Myself, I'm just waiting to see if we can come up to 106.35. Been waiting all week and it hasn't been wanting to do that. So I'm just sitting on the sidelines waiting for a good level. Now we're really at support down here, so do I want to be selling in a support zone? Probably not. Now, if the 4-hour trend did turn up here, okay, it may offer, if you want to go counter trend, the option to trade back up to broken support if you're that way in mind, okay? But for me, I tend to not trade the counter move. I just look to trade with the trend, all right, from a level that I like. Okay, Euro Yen, which is very consolidatory. Let's get rid of this fib for the moment. Well, this fib they're going to get rid of is across last week's range, and we traded up to 79% level, and we traded down almost to 127 extension. So we're overextended to the downside there in the short term. But I want to go to the day chart. It's very range bound. We are in a downtrend, breaking into a downtrend this week, but we're back to where support is. And at the moment today, we're reversing back up. So if we finish today with a reversal candle, I would anticipate we're going to move back up to 157.99 once more. All right. Now, what I've noticed, I'm just going to squash this in, is all this price action through the course of the month, the range of last month from low to high, all this area of support through here is in between the 62 to 79% of the range of the previous month. So we could actually be forming a base of support here to move higher into the next month. Or no, in any event, the higher time frame trends are actually up. The weekly trends up. We've just been trading back down inside the range of the previous month, and rather sideways. It's not been easy. But there is definitely, now we've got that drawn in, there's definitely the consideration here that we could be getting support down here to trade back up to 157.99 or up to 158.51. That's weekly resistance and daily resistance. Okay, so there's definitely the possibility we could hold here to trade out, especially if the euro dollar wants to rally up 120 pips or so. This euro yen would follow suit. Slav is saying there's also a risk of the bodge deciding to interfere. Well, yeah, there's always that risk because the dollar yen is at very high levels. There's always that. So, I mean, there's lots to consider at the moment when you're trading a yen pair, and you know, not just from a technical perspective here. Technically, we could be on support, but from, you know, central bank perspective, yes, the Bank of Japan could come in and, you know, interfere. Maybe they might allow the dollar yen to go up a little bit higher because the US dollar is most definitely very strong at the moment. So I don't know whether they can fight too much without spending a lot of money, but I'll have to wait and see. So yeah, there is that caution about the Bank of Japan, but we're on support here at the moment. So it would not surprise me to at least see a rally back up within the range that we've been forming this week, which is here at the moment. All right. See some form of rally back up this way. 79% level overlaps nicely with 157.99. So, you know, from my preferred option would be, because the day chart trends turned down, is to see if this can simply trade up to that level. Does it start to fail there to trade down? All right. Even though we're on support here, you know, we've, as you're saying there, Slav, dollar yen could get to 150, the magical number. And if we just quickly go to dollar yen's trading at 149.34. It's been up to about 149.70 approximately. So it is getting very high up there, certainly where we could see some intervention. So you have to bear that in mind. So if we just go back to the day chart. So with the day chart, you know, we are in an area where we could get support, but if we simply look at the day chart, it has gone to a lower bottom this week. You know, we do have a lower top, lower bottom, but we're on support. So we'll support hold. You know, what would be great is if we simply, we have a very clear break of this area of support. That would be great. And then we can look to sell a rally. At the moment, we could just stay range bound. So, you know, looking at pairs, I would probably look at a better pair than this, but this is what the pair is doing at the moment. All right. So if we're going to continue with the day chart downtrend, I would look at that range. Keep moving that down if price keeps moving down, and then look for a rally back up to the 79% level. Euro pound had a nice failure. Was discussing this level on Tuesday. And if you were with me yesterday talking about market structure, this is a perfect example of market structure. We've traded up to a weekly level. When we formed that weekly level, we had 3 rejections there on these 3 daily candles, holding at this level here. And we've moved back below that level. So we've run up to create possible double top here. That was on Tuesday, was another test. So for 4 trading days there, we've tested that level. You know, my 100 pip trade entry technique, trading that level with a stop 100 pips above would be happy days. 4 days there, it was holding at that level before trading down. Now it's trading down at the moment. I would be monitoring for, that's the first real drop. Keep dragging the fib down if it wants to keep moving down, and then look for the rally to occur. All right. Lawrence, you're telling me that the banks are forecasting now that dollar yen could to reach 155. And, you know, the fundamentals obviously are creating a higher price for the dollar yen, but, you know, the bodge can react anytime they want in true reality. Even if it's just to try to hold, you know, have a 500 pip reversal for a day or two, before then it bobs back up, just to, you know, keep the market under pressure. But, you know, the interest rate differential doesn't favor at the moment the dollar yen moving down, so it is a little bit difficult on that dollar yen if you want to trade it. Getting asked, how do I identify if a level is a weekly, monthly, or daily level? Well, that's very easy. Is whilst on this euro pound, I'm saying, when I'm looking at my day chart here, I'm saying this is a weekly level. It's because it's a weekly high on my weekly chart here. So if I say it's a monthly level, it's because I've drawn the level from a high on the monthly chart, even though I'm watching it on the day chart. So this level here is a weekly high. And when I'm looking on the day chart, I already know it's a weekly high because I know where I've drawn them from. So that's a weekly level of resistance because it comes from the weekly chart. Even though it is a daily level as well, it's also a weekly level. All right, if I go back to the weekly chart, these two highs here that we're moving below, this line here is another weekly level. So we're actually moving back below 2 weekly levels at the moment. Okay. All right, so on that pound, sorry, on the euro pound, I would simply be monitoring for, if that keeps moving down, drag the fib further down, but can we come up for a rally to the 62 to 79% level for a lower top to fall? All right. All right, let's get into pound pairs. Pound dollar, she's having a rally at the moment. It's coming up to a level we've broken below this week. This is only a minor level, but there's an area of day support here. So that's a day support low there that we broke this week, 121.90. So 121.90 up to 122 could be a good area for this pair to just come up to today. Stronger level would be this one up here at 123.08. That's a weekly level. So if you go to the weekly chart, that's where I'm getting that level from. All right. And a lot of these pairs, particularly this pair, this only had a half a week up there, and then it's had half a week down, 1, 2, 3, 4, 5.5 weeks down at the moment. A pair doesn't normally have more than that movement before having like a 1 or 2 week rally. All right, so we are rather weak at the moment, but a rally back to 123.08 would be ideal for me. All right, now might not want to move back above this level, so you can watch 121.90 to 122 today intraday at the moment. This move's going a little bit overextended. Today's projected high comes in at 121.91, so a good area to watch for a potential reversal today is up here. Look left on your 15-minute chart. You can see all that head butting against that level. So once we move below 121.90, I think this is Tuesday, broke below, became resistance, it just held there to move further down. So that could be strong resistance today. We're only about 3 or 4 pips away now. All right, so we're at a level where we could hold at today. Maybe we're just going to have a one-day rally because we traded above yesterday's high. And when we get into that area up there at the moment, we're going to be overstretched because we'll meet today's projected range. So we could certainly see a reversal up there. So I'd watch up there for an opportunity to trade down from if the market starts to reverse. Pound yen. This is how I drawn on Tuesday, still looking at that area up there. If you want to be a seller with the day chart trend, then that is your area up there to the day chart. Broken supports. I'm drawing the fib from last week's high, I think that is. Yes, last week's high. So, and we've just been trading within the range of last week or this week. So I'll be watching up at 128.67 to be resistance. Can we continue down within the day chart downtrend? So that's the higher last week. That's the lower last week. One of the webinars I've done this month is the range of the week, and we often felt at 62% level or the 79% level. So I'll be watching that resistance level and the 62 level up there. If we get up there today, we will be overstretched. Today's projected high is at 182.16, and that 62 levels at 182.44. So we'll be overstretched if we get into this area. We'll be at the top of the red pivot points too. So up here would be a very good area for the market to put a top in today. And it would be good to see a nice reversal back down up there if we can get up there today. Now back to the day chart. This is a downtrend on the day chart. This is just corrective back up against what's been happening on the move down. And all right, the pound's just hit that level. All these highs to the left here. All right, let's get into Aussie yen. Has traded down nicely from where I was saying it was going to fail at. Up here at 95.85. This is weekly resistance from this year and weekly resistance from last year. 95.73 up to 95.85. All right. So we've failed at weekly resistance. So it's been rather range bound, coming back up to the top of the range. And it's bouncing on day support here. We're back above 95.05 day support at the moment. All right. Still very consolidatory here at the moment. Now, I did tell you guys and girls that watch for a ride back up to the 79 level. We failed there. Hasn't moved through the low. Down to 127 extension, it's getting some form of support in this area, which isn't ideal because now the question is, are we going to hold above 95.05 to move back up to the top, or at some point are we going to break that level? But you don't want to sell into that level, so it's a bit difficult now. You know, as a trader, what I'd like to see is a clear break below 95.05 at the moment. Maybe to break this low. And at some point, then to see 95.05 to be resistance to trade down from. All right. At the moment, even though we traded below it, we're back above it. So some support's coming in on that high over here. So I'd like to be trading in line with the failure from up here, weekly resistance. Because if we go back to the day chart, let me get rid of that fib. These two lines up here are weekly resistance, and this high over here is weekly support. So what I'm thinking is that we could be maybe over the next month we've got weekly resistance here, weekly support here. Is we could have obviously already failed up here, to trade down to there. All right, now we could furthermore come up to this level and hold once more. All right, we've got the interest rate decision from the RBA next week, I believe, next Tuesday. So if that doesn't really lift interest rates, then we could see a trade down to the lower end of the range through next month. So especially if the Aussie dollar keeps breaking down. So looking up there still, 95.85, 95.73. Are we going to be moving down towards 93.03? But we could see at some point through the course of next week, if we can keep below 95.05, that we come back up to 95.05 to trade down. All right, so there's a couple of options to watch for depending on what price is doing. But I would suggest watching that larger weekly range and look to try and trade down from the top. If you trade down from the top earlier in the week, now you're at break even, and you're just waiting to see if it can break down. Timothy, you're telling me the pound dollar broke last week's low to trade downwards so far in the week, while pound yen hasn't. Yeah, pound yen is still trading within its range. It's in that battle between, the dollar yen's been moving up, so the yen's been weakening, and the pound's been weakening, so it hasn't got a lot of room to go anywhere. And it's just heading up a little bit because the pound is heading up, but it's a little bit range bound because of that. The whole dollar yen's moving up, pound dollar's moving down, so the pound yen can't really move anywhere too much. Yeah, a lot of these, Aussie yen, Euro yen, pound yen, not easy at the moment. All right, Aussie dollar. Now we're not able to hold below. This is the range of yesterday on my 50-minute chart, and we're just holding it at 62 level. But from a day chart perspective, we're not able to commit below the weekly support level. So this low is a weekly low here, 63.64. Got your weekly chart. Being very consolidatory all month. It's been maintaining itself below monthly broken support, 64.58. That's a monthly low. If you go to your monthly chart, that low is just there. So that's why I'm calling that a monthly low. It is a weekly low, but the highest level that it comes from is a monthly chart. And we've been holding below that for most of the month. You see it's sideways. And we've actually got two weekly lows here that we're not able to move down and through. So it's very difficult at the moment, the Aussie. Consolidating after quite a strong move down. Is it consolidating to rally back up? Or is it consolidating to break a lower? That is the question. The easiest scenario for a trader would be to see this break below these two levels of support. 63.57 is the lower level. But as we haven't committed down and through there at the moment, I would suspect we're going to move back up towards 64.58. All right, especially if we move above 63.85, that low there. So the only thing that's going to stop this from moving up is 63.85. All right. So if 63.85 holds as resistance over the next 24 hours, we could see a move below these levels here. But clearly at the moment, I just want to go back to the weekly chart. And we may be targeting down here at 62.47, when the interest rate decision comes out next week, depending on what it does. It's a monthly low from over here back in 2009-ish time. All right, where we false broke that level in 2022. But the market knows that we're getting down toward low levels at the moment. So that's why it's going sideways. We don't know whether we can commit down and through. Now, it's worth noting that if the S&P 500 continues to decline, the Aussie dollar will probably continue to decline because they're highly correlated, okay, in those events. So the thing that might start seeing this breakdown is if we continue to see a continued breakdown of the S&P 500 and price of gold moving down as well. So at the moment, it's consolidatory. Now, if you're wanting to trade at the moment, if we see any sign of a 4-hour trend starting to form to the upside, we're probably coming back up to 64.58, okay? And that will be the level to watch. So at the moment, I would need to see, if we come back down to retest this weekly support area, and then we come back up, we're probably going to form a little higher bottom here on the weekly chart. Sorry, on the 4-hour chart. And then we're probably going to trade back up this way. And as we're getting to the end of the month, come next week, the high of this month, where is it? Worth drawing in right now. I'm just double checking where the high of the month is. So that candle high there. We often just trade within the range of the previous month. Oh, so that's August high. Where's September's high? So as we're getting into next week with the RBA statement, that's probably, unless we keep moving down, if we move down, just drag the fib down, but that may be the low of the month. So as we get the interest rate decision next week, 62 levels here at 64.48 and the monthly resistance levels at 64.58. So that's the area to watch over the next few trading days. Do we come back up to there? That's where we could actually maybe form the high of next month in the early part of the month. That's what I'll be looking for there at the moment. So if we can form a higher bottom on the 4-hour chart, we could well be moving up to this area up here. So you need to work out, do you want to go counter trend? You know, if we see some kind of price action like this starting to form, there may be the instigation then for this to move back up to the high area of resistance. All right. So just monitoring that at the moment. New Zealand yen. Big question on the New Zealand yen is this 79% fib. We're trading within, as I said last Tuesday. Let's take that off for the moment. So that range that I've got drawn in is the range from the monthly chart of that one candle there. Last 2 months have been trading within the range of that one candle. So I'm just been monitoring that range to see. This pair's been really struggling to keep above all these highs. But historical high levels from over here. So I'm just monitoring what's happening up at this 79% level. What we are seeing today is we've had a minor drop in the week and we're back to the 79% level of that drop. There's not a lot of risk involved in trading at that 79% level, which is at 88.81. So in terms of risk to reward, you know, trading at 88.81, you put your stop 10 pips above the high here, that will go to 89.06. So somewhere there, you know, you're risking what, 25 pips for then the potential. We go back to the day chart to trade potentially back down this way. You know, if we do fail there and we trade down to 127 extension down there, that offers you a great risk reward, risking 25 pips to make potentially 88.67. There's more than 500 pips there. All right, so that's like 500 pips divided by us, that's like 1 to 20 risk reward. That's how you can create a great risk reward. All right, so I don't worry about losing 25 pips if this structurally is potentially could offer a massive risk reward. So back to the 4-hour chart, you can work out whether you want to trade up here or not. You can drop it to the 15-minute chart and look for a failure. You could be monitoring up here. Today, 3 times we've been failing here, once, twice, 3 times already. All right, you could be waiting for some form of trend line break just to confirm a turnover. All right, New Zealand dollar. Very range bound, very similar to, my mouse is not working very well tonight. Very similar to the Aussie. Don't know where my battery's going. Today chart. That's the monthly low, 59.85. We tested it last week and fell down. It's getting consolidatory. It's probably going to come back up and retest that level. We're in the middle of the range from this low to that high. So it's not in a perfect area to trade at the moment. I would simply be watching up at the top. 59.69 up to the high. Do we come up here as well? There's some 4-hour resistance there as well. So this kind of area up here, starting at 59.69. Do we come up to there? Hold. Can you see it's set up to trade down from there? Rather range bound at the moment. Depending on the US dollar news, if we get any US dollar news coming out that is negative for the US dollar, we could see the Aussie and the New Zealand pair, Aussie dollar and New Zealand dollar, move up the range above these levels. So we'll have to wait and see. Been very consolidatory Aussie dollar, New Zealand dollar through the course of the whole month. All right, dollar Canadian. As we've been saying over the last week, or I've been saying, and I know some of you have been responding to it, looking to see if we can move back up the range at the moment to this area here to form some form of head and shoulder pattern. This bigger range from high to low, we failed at the 79% level earlier in the month. We've had a sell-off. Can we come up to the 79% level to then move that way? All right, so I'm just monitoring that pair at the moment. Now today, we're just sitting above day support here, depending on what you want to do today, intraday. Did reject yesterday. Now, whilst I might want to be looking to sell it higher out, it doesn't mean to say it's going to get there. So this 134.89 level, you know, intraday today, we may break below that level, and it could become resistance to trade further down today. So just from an intraday perspective, you could watch to see if that's going to occur. As I'm talking, it's trading down. But we don't want to see 134.89 today be support. So you don't want to be selling into support. You want to see a clear break below it. And can it become intraday resistance? Because at the moment today, whilst we have been below it, we moved above and became support. We moved up. This could become support here for a trade up as well. All right, so watch 134.89 intraday there. Is it holding a support today? Or does it break below and become resistance? Dollar franc's been motoring on from the monthly chart range, high to low, we're getting up towards the 79% level. It has moved through the 62 level and the monthly resistance level here. So very overextended. It's negative today. I'm just monitoring this pair to see it over the next week or two in this area. Do we get a turnaround? Because there's the potential that we could actually put in a lower top here from the monthly chart perspective, because that's lower top, lower bottom. We in this area could perform a lower top to trade down long term. All right. So whilst the US dollar index is quite clearly in an uptrend, this dollar franc is not in an uptrend. It's rallying against the monthly downtrend, whereas the dollar index is in the monthly uptrend. So it's not the same story. Yes, we've been moving up for the month, but we're not in an uptrend there on the dollar franc on the monthly chart. We are on the weekly chart. All right. And we're on the daily chart. But if we start to see a reversal and if we start to move back below 90.84, we could see a trade all the way back down here. So I'm just watching for some form of reversal to form at the moment. We're just negative for the day at the moment. Doesn't mean to say we're going to be negative by the end of the day. And let's get told the pound dollar is moving up. All right, so we're just getting above 122 at the moment. That last candle was rather overextended. So all these highs to the left here on the 15-minute chart, a whole bunch of stops, I would guess, has just gotten taken out. And that's why we've just shot up. All right. Definitely overextended for the day. And, you know, we have been definitely overextended to the downside. So as I was saying, you could look for a failure there at the 121.90 level today, but my preferred level is up here. You may over the next 24 hours see 121.90 become support to move higher. But right now today, being so overextended, we may well false break that area and move back down the range. All right. Back to what I was saying, just with the dollar franc here. You know, we're negative for the day. It doesn't mean we're going to be negative by the end of the day. This is still in an uptrend. I'm just monitoring that to see whether we get a turnaround there. You know, dollar yen. You know, definitely today we're seeing a little bit of a US dollar weakness. All right, this is my weekly chart. Getting, you know, relatively close to last year's high. Weekly trend is up. That 148.84 levels is actually a day top from over here. Just here. So we are in an uptrend in all time frames at the moment. We're just very much aware of the Bank of Japan doesn't like price being where it is. And they could come and intervene for 500 pips to the downside at such high levels. That's the difficulty. But as I was saying, I'm going to move to the 4-hour chart. As I've been saying, I just want to draw my fib from the last higher bottom on the daily. As I've been saying, yeah, if you want to trade the dollar yen, look for a dip. So there's the day chart low up to the most recent move. Is look for a pullback. This is the 4-hour chart, but that's the range on the day chart. Look for a pullback to the 62% level or the 79% level. This was the approximate area I was discussing on Tuesday. This is a daily broken resistance level, but could be support at 147.94. So if we had some intervention, or at least, you know, if we get a nice sell-off back down to support, there's less likelihood that you're going to see some intervention if you're buying at support. If you're buying above support, high up, you've got a higher chance of getting caught by some form of intervention. So that would be a good area to watch down there at 147.94, 147.82 over the next week, if we can get a pullback. It's also worth starting to monitor. Let's say this is the monthly high. The monthly low, the low of the month, came in down there. So it's also worth starting to monitor. Let's say we get some form of intervention. That's the range of the month so far. Let's assume that's the high of the month. If it's not, we can keep dragging the fib up. But already it's worth monitoring. Let's go to the day chart. Sorry, the weekly chart. I just want to get rid of that fib. There's the range of the month at the moment. It's worth monitoring where the 62% level is. And you can see this area at 146.45. So if we got some intervention, that as a price level got dropped through and rejected to move back up. All right, so that's where the sellers really came in last time. We had a bit of a gap down here on start of a Monday, and we got support down here to trade all the way back up. All right, so this whole area here, if we did get intervention, would be the area to watch. So that is 145.90 to approximately 146. So 146.45 down to 146. You know, just worth having your chart set up for some form of intervention. If it comes and we spike down there, we start to see it reverse. That could be where the low of the month comes in for the new month coming. Yeah, we've got one more trading day left. All right, last pair to review. Let's just have a look at gold. It's not a pair, but it's an instrument. But the weekly charts, we've got this triple top at the top. My mouse will work. 1, 2, 3. Lower top, lower bottom, lower top, lower bottom. Got a bit mixed over the last 3 weeks, but it has now turned back to a downtrend. The monthly chart here is potentially going to finish with a negative monthly candle to the downside. You know, if you're looking at this as a day chart or a 4-hour chart, you'd probably say this is coming down to support. All right, 168.78 support. All right, so that monthly high there, 1916, we could get back up to 1916 into the new month. That's that line there. So, you know, I was certainly watching at the moment 1916. I said watch 1916 on Tuesday. But I don't think, where was Tuesday? What day was Tuesday? I think we were a fraction below on Tuesday. It was the 26th. And we never quite, we were around about here. We never came back up to 1916. But, you know, at the moment, the fib range to watch is there. Keep moving it down if price keeps moving down. And if we move down a fraction more and then rally, that 62 level will be very close to that 1960. 1916, 1918 up there. You know, look to sell a rally. There's some form of imbalance that may need to be filled. There's a bit of imbalance in here as well. And there's another imbalance in this area here. So we could see at least a corrective move up. Often when we get into the last 1 or 2 days of the month as well, people's, you know, large traders, institutions are squaring off their positions for the end of the month. And if they've been short, they're going to be squaring off, and we'll see some rallies coming up, back up the charts, maybe late, you know, today into tomorrow, maybe start of the new month. So I'll be watching still up here at 1916. That would be the perfect area. And what we might be seeing, we're obviously at the end of September. September, October is usually, if we have a crash in the stock market, that is often the time of the year where we have, you know, stock market crashes. So we haven't had a stock market crash in its truest sense for quite a while. We've had a, you know, we go to the S&P 500 here, we've had a very orderly sell-off down through here. You can see the corrective measures, but we haven't had, you know, that was some form of crash in the COVID area, but that's nothing like a crash, say, that we had like in 1987 and some of the other crashes we've had since then, where we get a very sharp shock to the market. But those can happen in September, October time, historically. So, of course, we're almost out of September now, but we're heading into October. So it's not out of the realms that we could, you know. Now, from a very large perspective at the moment here on the S&P 500, if this is a major, major historical top up here, then we've had this move down. We, of course, haven't taken out that high. We've rallied up through this period here. Is, you know, we could enter a major bear market and simply go like, boom. All right, this could be the first initial sell-off, which was quite orderly. Then a correction. And it'll be interesting to see what happens down through here. Is it orderly or does it get very rough? We'll have to wait and see. I'm not suggesting it's going to get rough, but just historically in terms of where we're at in terms of the year, if something's going to happen, it happens this time of year. So we'll just have to wait and see. I'll just put my fib back in. Slightly saying could be a nice trade on the short gold if they're dropping to 1600. And then you asked me, have you already been trading in 2008? I've been trading the forex market since 2005. So I was trading in 08 when we had the GFC. Yeah, I wasn't in at the very end of the the movement, but yeah, I was trading. Yeah, I can remember like we were having 500 pip days, very volatile. That at the moment, lots of things are a little bit, certain pairs that if we do get a major collapse, let's say on the stock market, and I don't know whether we will or we won't, this euro yen, for example, yen pairs will sell off if we get a collapse. And, this euro yen at the moment is very sideways here. Could be going sideways for a collapse. All right. We'll have to wait and see. So if this does start to look a lot more orderly rather than sideways, we get a nice move down and a nice lower top forms. And the stock market selling off, that might be, what I'm trying to get to, my point is, if we do get a collapse, then some of these currency pairs will maybe sell off, quite aggressively, but it'll be for quite a while. So if you can take a position early in the phase, because when you get to the very nasty phase, like in 2008, if you're in the early phase and you're still holding, you're not worrying too much when it gets really volatile at the end. You're just working out where you're going to take your profit and get out. Trying to be profitable at the latter end when it gets very volatile is very difficult. So being in the early phase is the most ideal spot. I was very fortunate when we had the COVID low come in. Let's just go to, I don't know, the Aussie dollar. When we got the COVID low come in, and get my mouse to work, I was fortunate that I got short way ahead of time. I can't remember where I was short, but that was a COVID low, but I was short up here somewhere on a number of pairs. And I was able to take my trade off, not at the low, but close, within the week of the low. So I was very fortunate. But if you're trying to get in as we're hitting the low, it's very volatile indeed. So, if we do start to see a very significant run, it's always nice to be holding some positions from the early part of the phase. And yeah, I'm gonna have to correct myself. I'm saying here, the COVID low was over here. You just told me it was 2020. Yeah. I'm just looking at this because I was short here as well, but I was fortunate to be short way up here, but see that collapse down through there over those. This is the weekly chart over those last 2 weeks. I was short up here. I can't remember what I was doing in 2008, but what the point I'm trying to make is that when you get in these very large candles down, it's very difficult to get in because often the days, if we go back to none of my data should go back to 20 on the day chart, is the days on the day chart. Let's just scroll back to 20 if we'll go that far. Is some of these days, on the Aussie, there was a day there of 333 pips, and the next day was 333 pips. If you're looking at a pair like the Euro Yen, they're like 500 pip days or 600 pip days. So when you get this final drop down in times like the GFC or the COVID low coming in, it's very difficult to get in. You need to be ideally getting in when it's not too volatile. And if you're fortunate enough, then you're just doing your best then to get out. That's all I can say. I didn't get out right at the bottom, but I managed to get out close to the bottom. And then I didn't try to trade the reversal. But hopefully you can see here, when This is the COVID drop on the Aussie, where we started moving down. Is usually what happens is, like it does here, it turns into a downtrend and it's not looking that volatile, and then it gets volatile. All right, and trying to get in when it's volatile is very difficult. So once you start to see a change in trend, you just trade in the trend. And if you're fortunate enough to holding a position, suddenly things turn for the worse. And if you're fortunate, then, you know, I think I was short about 6 pairs coming down through here when things were getting very volatile. And all I did was the best I could. Well, I was seeing a very nice profit in my account. And I at one stage, I just closed all my trades out and thought, well, I'm making a very nice profit here. I could make more profit, or this thing could, you know, totally turn around very, very quickly. So I've had other periods where it's been very volatile and I haven't been as fortunate to get out with as much profit as I'm showing on my account. But yeah, it's, you know, and often, you know, like 2008 and the COVID low there, if you're not in the market, sometimes you miss out, and you know, you're kicking yourself. But I've been fortunate a couple of times where I've been in early and then the market's, you know, collapsed. Haven't been unfortunate, I've been in the wrong way, which is good. All right. So, you know, if we break this on this Aussie, if we break this 22 low, we could well see that, you know, 2020 low. All right, this was a nice move down here, but that was, you know, a very nice collapse into the 20 low. So we might see a challenge of this low. And it's not out of stretch imagination. If the stock market does collapse, say, I'm not saying it's going to, but let's say we do, we could see a significant break of that low down to that low, and then see a significant, very sharp correction back up. That can often happen as well. So we'll have to wait and see what happens. You know, we may get something from maybe China coming out. If you've been watching China with the Evergrande property debacle, I think that I read a couple of weeks ago, there was another property, even a larger property company in China that was struggling as well. So, you know, if we get some contagion from China with the property issue, then we may see, you know, a strong sell-off. We'll just have to wait and see. All right. All right, everybody. At the moment, I think we may get a rally over the next couple of days, you know, as I'm talking about collapses in the stock market. We're not seeing a collapse yet in the stock market. What's the Dow doing at the moment? Starting to show a downtrend. It's not collapsing. Nasdaq 100 starting to show lower top, lower bottom, you know, but what we're definitely seeing on all these pairs is the big sell, or, you know, the large movement down. They've all rallied to the 79% area on the Nasdaq 100, on the S&P 500 there, and on the Dow Jones as well. We're at the 79% failure up there too. So there's a definite sniff of a major high coming in there. We'll just have to wait and see. All right, everybody. Thanks very much. Thanks for the questions coming in there. And we'll just have to wait and see whether these stock markets really do have a run. Probably won't have a run this week though, so we'll wait and see what happens next month. Okay, everybody. Thanks for your company this evening. And if you have the time, look forward to seeing you next week. Thanks, everybody.